With interest rates on the rise, how does that affect your buying power? Stay tuned for this week's segment of Market Watch to find out more. Hi everyone, thank you so much for tuning in to this week's segment of Market Watch. My name is Joshua Barks, an associate broker with Keller Williams Realty Boise and the Barks & Co. Real Estate team. And this week I am so excited to talk a little bit about interest rates before I dive into what happened our first week of March here in the Boise housing market. So the reason I want to bring up interest rates right now is because they have been on the rise since the beginning of the year. We actually had our historic low back in January of about 2.5%, a little higher than that, for the 30-year fixed on a national average, according to Freddie Mac. Now rates are at just over 3% at 3.02% for the 30-year fixed, also according to Freddie Mac. So that's actually the first time they are over 3% since last July. So 7 months we went with rates below 3%. Now we're back to 3% where we were in July. So I kind of wanted to talk about what does that mean for you as a buyer? Well, here's a couple of breakdowns that might help. If you're looking at a house, that's $400,000 for the purchase price. Now, all of these numbers are going to take into consideration that you have 20% down, and this is a 30-year fixed conventional loan. And it doesn't include property taxes or property insurance. So it's just principal and interest payments. So $400,000 at 2.5%, like we saw earlier this year, would yield a monthly mortgage payment of about $1,275. So $1,275 for a $400,000 home in January. Now, if you're looking at a $400,000 home with where rates are at 3% with 20% down, your mortgage payment is now almost $100 more at about $1,350, so $1,350. So by waiting a couple months as a buyer, you actually now owe $100 more a month in mortgage payment for the same price of a home. So that's what I've been talking about when I've been saying, if you're a buyer right now and you want to buy and you can afford it, don't wait. Get your ducks in the row quickly, because prices and rates are on the rise, which are going to hurt you down the road by waiting. So with interest rates jumping from almost $100 a month every 0.5% we go, what I'm predicting for the future, if you've seen other videos, this is not new news to you. Interest rates are likely going to be below 4% by the end of the year, but they're going to continue to rise. Not at the pace that we've seen the last couple months. I anticipate rates are actually going to stay about 3%, maybe hover up to about 3.25% as we get through the spring selling season. And then we'll probably see rates rise and fall a little bit throughout the year and end the year around maybe 3.5 or 3.75. I highly doubt we're going to be above 4%. So we're going to be less than 4% by the end of the year for the 30-year fixed rate mortgage, conventional loan. And with that, if you're looking at $100 a month more roughly in mortgage payment, that means that $400,000 house at 3.5% yields a mortgage payment of $1,440 or $1,450. $1,440 is actually the correct number with that. So if you're looking at keeping a mortgage payment the same, so let's say on the flip side, you're not shopping for a certain purchase price of $400,000, okay? What you are instead is, this is my maximum payment that I can afford. Let's say $1,500 for easy math. $1,500 a month is my max mortgage payment for principal and interest. Again, this doesn't count property taxes, insurance, and takes into account that you have 20% to put down on whatever the purchase price may be. So if we're looking at what interest rates were in January, $1,500 a month gets you a $475,000 maximum purchase price. Today, $1,500 a month gets you approximately $450,000 in the maximum purchase price. So nothing changed except you went from being able to afford $475,000 to $450,000. And at the same time, home prices have come up by a couple of percent. So you're really looking at a smaller, lesser home. So the longer you wait, the more you're going to have to compromise as a buyer in this market. Then if we have rates increase, like I anticipate, we'll say 3.5%, so another 0.5%. $1,500 a month still being your max payment, you're now looking at a $420,000 home. So it went from you being able to afford $475,000 in January to now it's December of 2021 and you can only afford $420,000, more than $50,000 less. So that's what I mean when I'm saying interest rates will affect your buying power, and as prices rise as well as rates, you're going to be able to afford less and less home. So waiting is going to cost you at the end of the day. Same on the selling side. The longer you wait, the more those rates are going to cut into the equity that you have as prices rise as well. Okay, that's really kind of an overview on interest rates. It's really rough and dirty, so everyone's situation is going to be specific to you. And if you have any questions about that, just reach out. I'm happy to connect you with a lender that knows much more than I do, and they are fantastic. So let's dive into the weekly numbers. Now that I have talked about what rates are doing at that 3% for $1,500 a month, you're looking at a $450,000 max purchase price. And if you're just looking at a $400,000 home at 3%, you're looking at about a $1,350 monthly mortgage payment. So with what's going on in the market over the week, we have inventory rising, which is fantastic. We are still below 200 homes on the market though for all of Ada County. We have 191 available listings in all of Ada County with 169 new listings in the last 7 days, which is fantastic. So week over week, we're up about 50. And with new listings, we're also up about 40. With the number of overall pending sales, we actually stayed the same there. 530 last week for 530 this week, though it's not the same homes that are pending because we had a significant amount of sales. We had 155 homes sell in the last 7 days, whereas the week prior we only had 116 sell. And so the reason pendings are staying the same overall is because we have new homes coming on the market, new homes going under contract, and homes selling. So that number isn't that demand is now flat. It just means that homes have sold and new ones are coming on the market. We are still experiencing a very vigorous selling market right now with not enough homes and lots of buyers out there. So if you have any questions, if I can give you any other information or help talk about your specific situation and what's going on to get you on track to make sure that you're meeting your real estate goals, just give me a call, send me a text, or you can always email me. My number is 208-914-1095. And I just want to be that resource for you to help you out and uncover and demystify all of this information. Because right now, we are in a time where there's so much information out there, and if you don't know, you're not the expert in that field, it can be really hard to weed through it all to figure out what is actually true and correct information. So reach out, that's what I'm here for. Ask questions, leave comments below the video, and we will see you next week. I hope everyone has a fantastic weekend. Next week, we're going to be covering the deep dive in the market dynamics. So stay tuned for that as well, and we will see you then. Bye, guys.